for joining in today. Could you tell us what's the kind of money you want to put into these subsidiaries? How much are you planning on putting? What is the rationale? And currently, what is your stake in these subsidiaries?
Okay, so three questions. Number one, we have two subsidiaries, PTL. The first subsidiary is the e-commerce company, latest1.com. The legal entity is called POT, Palred Online Technologies.
Correct.
In that, PTL owns 75%. Okay. And the second company is a software company called PTS, Palred Technology Services, which is purely a software product company. In that, the parent company, PTL, owns 100%.
Okay.
The second question, how much money? Currently, we have a little over 20 crores in cash on hand in the listed entity, PTL. We are raising another 22 crores, which was just announced less than a month back, and the EGM is being held for that tomorrow. If this approval, if this is approved by the EGM, then we will be infusing another 22 crores into the listed entity. So that will bring the cash position to little over 40 crores, 43 crores. Now, the total investment that we have envisaged as, committed earlier also is about 30 crores more into the e-commerce business, latest1.com. So that is the flagship operation or the subsidiary of the listed entity. So the stake of the listed entity will increase from 75% to maybe 80-85% after this infusion.
So 22 crore is already going to be invested in latest one, and over and above that, there is going to be a 30 crore investment by the promoters, which will help you raise your stake, right?
That is correct. We have already invested little over 23 crores in the subsidiary, and now we will be investing another 30 crores from the listed entity into latest one. Correct.
Okay. If you could tell us, when we look at the company's financials, it appears that this year, FY17, the revenues may be pretty much the same as what we've clocked in FY16. FY16 revenues were about 38 crore. And in 9 months, you've only done revenues of about 30 crore. So add another 8-9 crore, which seems to be the quarterly run rate, or a little more than that. The growth rate seems to be on the lower side for a business which is in e-commerce, which seems to be growing at a pretty fast clip. If you could tell us, what is the reason for that?
Okay, so there are two questions in it. Number one, why is the growth rate not high? So if you look at it, you should see the 3 consecutive years from beginning. So from year 1 to year 2, the growth rate was, maybe closer to 250%. So year 2 to year 3, which is the year just ending March 31st, the growth rate is still 10 to 15%. So that has 2 reasons. Number one, of course, there was a demonetization effect for an entire quarter on entire retail industry, not just us. So that is one. And 2 is 16-17 has been the year of, and I also think 17-18 will still be the year of shakeout. So which means the slightly more inefficient companies which are only thriving on funding as a differentiator, they will struggle. And I'm sure you're seeing all those stories in the papers too. So this has been a year where you have to strengthen your business model, you have to actually differentiate it, you have to define it correctly, and I think we have gone through that entire process, and at each step we have announced that, at one point we said now we are a B2B and we are also a B2C player. And number 2, we have also built a private label Petron. So if you look at all of these, 16-17, we have emerged as the first Indian e-tailer to be gross margin contribution positive. If you look at our monthly run rate right now, our net revenue is little over 4 crores, but we make almost a 15% gross margin after cost of goods, cost of delivery, and cost of sales.
Right.
So only indirect cost is our burn rate right now. So we are the first Indian e-tailer to get there. That is more important than just demonstrating the growth rate.
Absolutely, absolutely. Srikanth, though, before we let you go, you're sounding very positive on your business. You have your strategy in place, etc. Tell us, when will you be profitable? On the EBITDA front, when will you be profitable? When can you give us a net profit? That's important because as you're speaking, the street has a lot of interest in your stock. We have seen that the stock has gained, 50% in this fiscal itself. It's spiking up as we speak as well, but numbers need to speak. So if you could tell us EBITDA positive numbers, can we expect in FY18? Can we expect in FY19? And also, when can you turn around into the black from the red?
Okay, so two things. Honestly, Amazon or Jeff Bezos has not been asked this question even after 25 years when he will be profitable. And I'm only 2.5 years old. But anyway, I will try and answer the question.
Right.
So we are gross margin contribution positive. It is easy for us to make the company fully profitable. But if I have to choose between making the company profitable versus growth, in the year 17-18, our objective will be growth. I don't mean, irrational and, growth at any cost. It will be controlled but aggressive growth without a huge bleed and a burn rate. If we can become positive, positive on a full EBITDA basis this FY, we would try to do it. However, I would look at more like the next FY 18-19 as our year to turn profitable, because this year we would like to try and make some investments in, going overseas. We have registered a subsidiary, as you know, over a year back in Turkey. We think this is a very good and a unique business model that can be replicated in other emerging economies.
Mr. Srikanth, but will you be profitable in the next 5 years at least?
As an India standalone operation, our target will be to become profitable next FY. I cannot guarantee that, but that is definitely our target and plan. As an India standalone operation,
Perfect.
Next FY 18-19, our target is to
All
be
the
profitable.
best, sir. Great.
Thank you.
Okay, that's Palred. The stock is up close to about 4% in